Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the charts for Vechain, taking a look at what's been going on most recently and what I would expect to happen next. Now as I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe. Tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Now if you haven't yet joined us in Discord, the link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there. So why not go ahead and check that out today? Right, with all that said, let's get started and get right on into what is going on here with Vechain. Okay, so here we are, we have VET paired up with USDT, we're on the hourly chart and Binance is the data source. And, you know, for the most part, we've seen a really long-winded sideways kind of corrective move going on for Vechain. And this is basically the 18th of June all the way through to where we are right now. It's a total of about 39 days. It's boring. There's a little bit of money to be made here bouncing between a couple of ranges. It's very corrective and what we're looking for is to find out whether or not we are done with our corrections and ready to move on down into the lows, or whether or not we have a little bit more upward momentum before we can start to really be confident about moving on down. Now, essentially, there's a couple of key levels that we have to be aware of for Vechain. The first one is going to be this top line, this wave one low. Wave one low comes in at 2.809 cents. Okay, that's this dashed line at the top here. And, you know, for the most part, if we cross that line by pushing up higher, then we are going to invalidate any need to go down lower. Okay, so under the structure, we'd have this as a wave, say C, rather than wave 3, and we don't have to think of this as a wave 4 move, but instead, you know, a reversal. So this could be a corrective structure going up, or a trend-based structure, depending on how things develop. So for right now, we are in a wave 4. Okay, with the potential to come down into a wave 5, okay? And all of this is basically given from our upward line here of wave one low at 2.809, okay? Cross that, obviously we invalidate. Now the next most important level is going to be this one down here, our wave 3 low. This comes in at 2.003 cents, okay? Now if we were to break down from our current position and we were to come down lower than this level, it confirms that we are definitely going to be in our fifth wave. We've completed wave 4 by not crossing higher than 2.809 and we are moving on down and we should be expecting to hit our fifth wave target. Okay, so those are the two key levels that we want to be kind of really focused on. The wave 1 low, which comes in at 2.809, and the wave 3 low coming in at 2.003. Okay, those are the two levels. We've been trading between the two of them, right? So our fourth wave for the last 39 days has been very boring. Yes, we've seen some pretty good moves. So we saw the initial bounce upwards, which was a nice, let me grab hold of this. Where are you? Come here. Come on, there we go, 33%. Okay, then this was met by downward price pressure. Okay, this actually took us and take it over to this area here, for example, 22% down, and then from that low there we moved up to a nice high of 32%. Okay, before falling back down. This one actually being a little bit more easy on the eyes, just coming down here by 17%. Okay, so a lot of volatile movements and a lot of money to be made here. 33% up, 22% down, 32% up, 17% down, and, you know, so far moving on up a little bit. So knowing this, there's a couple of things that we should probably acknowledge. Okay, one, for anyone who loves the trend line, they're not really my bag, but I'll use it to help demonstrate what is going on here. Okay, so we have one trend line here. Basically, we're setting the higher low. Okay, I'm going to cherry pick out this one, and I'm going to move it over here as well. Okay, higher high and a higher low. Okay, and so essentially you kind of get this kind of almost flag-like pattern, if you will. So when I zoom out here, what do we actually see is we see very common patterns that happen time and time again. Essentially, you set, let me actually move down to this area here and show you. And what I will do is I'll grab hold of, I think, I'll use a parallel channel as a good notion to this, right? So we end up with this kind of area, right? And basically this would be a series of of basically setting up some higher highs and some higher lows as we kind of change, basically stuck inside this channel. And eventually what you tend to find is you break down from it, okay? And obviously this is only one of several possible scenarios, but when you have this, it's kind of a bit of a flagged situation, specifically if you've got volume bringing us down into this area. So basically we have this downward momentum, then we start to see this pattern, and then we break on down. And then we can think of this as a couple of different options. So if I have another one over here, for example, and just move that to there, and then just bring this up, we'd end up with something that would look like this, right? Now, let me grab that, move that. So when we have that, we can actually acknowledge that this is something vastly different when you kind of take into consideration Elliott wave theory. So here you'd have a wave 1, this is a wave 2, this is a wave 3, this is a wave 4, and that's a wave 5. Okay, now you might have a couple of these kind of flag situations. And what I mean by flag is this becomes your pole, this becomes your flag. This would be a bear flag situation, and you'd have them here and here. And then what you'd actually look for is the opposite kind of way around here. You'd look for some kind of ascending pattern down at the bottom rather than this kind of more bearish kind of scenario. So knowing that we have that potential pattern, keep doing that. Let's bring this back up. Here, it's not as neat as that, obviously. It's kind of a loose one, but we should acknowledge it nonetheless. Now, this is a 5-wave structured drop from what looks to be a 4th wave position here as well. So our expectation should always be that we end up with this kind of 5th wave down a little bit lower. The only alternative to this is we actually have an ending diagonal, as this is the last move before we actually find a potential bear market bottom. We could actually see overlap between wave 4 and wave 1. And if we don't have the right structure to take us out of it, we can still end up going down into new lower lows, but it would be called a diagonal. Okay, and these are a little bit harder to spot, and they have some additional rules. I won't go through them all, but basically your standard 5-wave move would look like this, and there's no overlap between wave 1 and wave 4. Wave 2 does not go retrace more than 100% of wave 1. Now for a diagonal, this actually ends up looking something a little bit more like this, and we end up with something that looks like that. Okay, usually wave 3 is not usually the most powerful, but it cannot be the shortest. So normally you'd find that wave 1 would be longer. For example, the wave 3 is usually going to be your second longest, and wave 5 would be your shortest move. So you might end up with a little bit of overlap, something like that, right? And that becomes your kind of ending diagonal. So it's possible that we have something like that still play out here within this structure, because you can kind of see wave 1 though is not really powerful. Wave 3 was more powerful, and we haven't invalidated anything, but I would be cautious just towards the end here about writing off any lows without first considering what an ending diagonal might look like within this structure. So I'm not expecting it, but I do want to kind of just flag it out there. Flag, there's a pun in there. But nonetheless, I do think that that's really important that we kind of acknowledge that we potentially do have a bear flag situation, and we do have the structure still indicating that we can move on down lower. Now at the moment, this is indicating 1.65 to 1.86. okay, so those are the lows at the moment. This particular area though, what we saw yesterday with the recent kind of move upwards is interesting. It's interesting because it's the rest of the market is kind of following a very same pattern. We bring up our stochastic for this as well. Okay, so here we can see that we're down nice and low, and we've got some progression to the upside to be had there. We're kind of moving the price up a little bit right now, which is good. If we take a look at the 4-hourly, we're overbought those, so that's not going to be sustained for too long. The 8 hours also up there, and the daily is actually in the middle right now. So it's very much just like Bitcoin. Okay, so what we have here is a potential move, but we might see a zigzag just inside this little structure. This then makes me think that we haven't finished the C wave. So if I grab that C wave and move it up here, what we might be looking at is a 3-wave structured move where we have this one, and then we still have to have that Y wave. And the Y wave might be made up of a zigzag, which is a 5-3-5 structure. So we end up with 5 waves, 3 waves down, 5 waves up. And it would look like we are more bullish than we actually are potentially. And again, this could potentially create this, this invalidation of wave 4. Okay, within this little move here. And this then leads me into knowing that all of this is corrective we still have to move on down. The question then becomes, do you go down into new lower lows, and is it an ending diagonal, and all those kind of things? Those are the kind of questions we'd have to ask closer to the time. It's also possible that we just do not invalidate the fourth wave. We still have the zigzag by retracing the B wave much lower, and then we just come up and retest that area here. Maybe we have the double top or something to that effect. Okay, so there's a lot of speculation right now, too much to kind of be really concrete about anything, but essentially it does look like we have this kind of 5-wave move right in here, kind of 1, 2, some kind of 3, 4, and 5, and then this would be met with another kind of 3-wave structured move down. The deeper this move, the better, unless of course we really want to go and push the boat and try to invalidate anything, but I think that's going to actually cause more pain than good, because the corrective structures could be perceived as that diagonal, and that becomes a lot harder to read, and I think more retail investors are going to get kind of caught out by it. So I kind of would like a deeper kind of correction here, not necessarily going down lower than this origin level, down here at 2.252, but I would expect this to move up afterwards. And if we take a measurement of this, right, and we were just to kind of take this entire measurement here and just assume that we were to come down to find a good area of support, which could be, let's take this area here, for example. We could move up to this area of 2739, just approximately, and that would still be an ABC structure, a zigzag structure, but yet keep our fourth wave structure intact without any invalidations. So there's a lot of things to kind of look out for, but it's all depending on what happens next. Over the next kind of day to 2 days are going to be key for all of crypto to kind of give us a good indication as to what is going on. I'm going to take this off for now, see how things develop. But this could also be some kind of wave 2 structured move, and we're just kind of starting off a really kind of weak move here, taking us down into our final, fifth wave at a later stage. So there's a lot of things to think about, lots of things to be concerned with. Essentially, I do think that unless proven otherwise, our expectation should be that we move on down. We finish these lows. Currently, I have these, as I said, mapped out. Just here at 1.650 to 1.860, that hasn't changed because we have not gone higher than this level here just yet. So as that changes, then obviously we'd have to adjust, but for now nothing is invalidated. The lows are still valid until proven otherwise. So guys, I'm going to leave this video right there. If you have found it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.